Good morning. This is Ron Brown. It's February 5th, 2023. I'm going to take a quick look at the market, but I'm primarily going to show you something that I worked on over the weekend, and I'll get into that here in a few minutes. Anyway, standard risk disclaimer: any stock, index, or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. Okay, I'm here in HCSI, my primary analysis and prospecting tool, and I'm going to go into my market analysis user groups. I'm going into folder number 1, clicking on the warehouse view, and then I am going to use my quick pick to quickly go up to the top of the list, top-down analysis, major markets, and I'm going to sort on raw combo. And this is the combo rank is percentage price change 1 day, and Friday was not a good day in the market. There was some profit taking, and we'll take a look at that. I'm going to go to my NASDAQ Composite, bring it up, and then once again I'll use the quick pick, quickly go to the market charts, and we'll start with this first chart here. Now this is the daily chart of the NASDAQ. As you well know, if we start at the top, you can see accumulation is still up at A. I'm going to use my alternate 1 key to zoom in on this so we can get a closer look at this over here. And then I'm just going to start over here on the left. I'll bring up a tool here, an arrow, and point some things out. We're only off 18% off the 52-week high, and we're 19% above the 52-week low. Change since the beginning of the year is 14.7%. So you can see there's been a lot of progress during the first part of the year. There's that accumulation A, and Bongo weekly is yes, as is the Bongo daily. The fan is still not trending up. It's neutral. It's neither up nor downs. And as we look down here, these are the numbers for open, high, low, close, and so on. And notice the volume was once again very high, and you can see that over here. These blue bars represent strong volume when compared to the prior 5 or 10 days, and we're seeing more of it. Now, on Thursday, there was this huge gap up at the beginning. Now, as I mentioned in my written image, I don't know if this is an exhaustion gap or if it's a continuation gap. We're not going to know until we see what happens, but you can see what happened on Friday. It opened here, traded all the way up here, and then by the end of the day, it was back down at, let's see, the range over here on the left. Here it is. It's 19.18%. So people chasing here, if they chased and bought up here, they lost some money. But what do we have here? We have obviously an uptrend, a series of higher highs and higher lows. This is a daily chart. I'm going to make this a weekly chart. And you can see by using the weekly chart, the W, depending on how I look at this or we look at it, here is, I don't know if you could consider that the left side of the W, but I have been looking at it this way, and when it broke past the center here, I would say the formation is complete. It doesn't have to take this high out, in my opinion. Now let's change this to a monthly chart with alternate M. And you can see that the monthly chart, this bar here for January, cleared December bar. Here's a low. You could say these are higher lows here, and then this would be a higher high. So on the monthly chart, I would say a trend is emerging. I'm going to go back to the daily now with the alternate day alternate D key on the keyboard, and you can see that the decliners led the advancers on Friday. Advancing volume was less than declining volume. The ARMS index went higher to the zero line almost, which indicates selling pressure. So we've come so far so fast. I'm a little concerned that it's been overdone, because what this is based upon is, well, I don't know. I mean, Netflix earnings were okay, but the stock has moved up nicely. Of course, Meta was a big story with a $40 billion buyback. Their revenues are up, but it isn't taking much for people to jump in. Now, on this candle right here, somebody posted on the Skype board, I think it was Fred, that that day was the most massive short covering for hedge funds that we've seen in years. And if that's true, and I'm sure it is true, that means that this could be an exhaustion gap right here. So let's just wait and see. All you can do is control the risk. I'll get this off of here. Let's go down to the next chart. The next chart has this blue line. This is if it's going up, the NASDAQ Composite is outperforming the S&P, and you can see it was going straight up here as it was outperforming the S&P. So the money's coming into tech stocks, and then on Friday it was underperforming the S&P. The next one just has, it's the same chart except I have an AD line in here. This is 1B. Let's just go down to this one, which shows the NASDAQ new highs and new lows. So we were making a lot of new highs here compared to new lows, and it did turn down. I'll put the crosshair on here. On Friday, you can see that it turned down. And then one more chart on here. And this is the AD line for the NASDAQ, and back here is where it started turning up, and it really hasn't looked back. Now the date on this is 1/4 where it turned up, and on 1/6, if you look down here in the corner, or I can do this, alternate I, this is better, on 1/6, I need to get this out of the way. That's when the move started. You can see there was a volume pocket pivot on this day, and you can see all the volume bars that reinforce this move up. Excessive volume with the index moving up indicates strong buying. At the same time, the ADE line was moving up. Now I want to go to a different chart here. I'm going to go into my broad market indices. See if this is the one I want. Yeah, let's use the S&P 1500 index. But now I'm going to go to a different chart. I'm going to go into my HCSI index charts, and I'm going to look at this chart right here, which is 6A. And remember, the day was the 6th that I said the market really started making its move. And right here, as you can see, on the 6th with the S&P 1500, which is composed of the 500, the 400, and the 600. That's when we had this pocket pivot here. We had an effort to rise on here. The advancers versus decliners were over 5-1, as was the advancing volume versus declining volume. The force indexes 2 and 13 both turned positive, and the volume point of control was already positive clear back here. Let me move this out of the way. So it turned positive here. But the big move up was on the 6th, which corresponds to what we saw on the NASDAQ chart. Now here is another confirmation the other day. The light green means that not all of the indicators are dark green. If the advances versus decliners is between 3-1, but not 5-1, it's going to be a light green, and the same thing goes for the volume. So we're getting confirmation all the way up here on this move. Now this is only stuff that you can see in HGSI. Now I want to move on to a new feature that I put in over the weekend, and I'm going to go to a different chart. I'll just go down to my daily chart here, minimize this, and I'm going to go into my user smart groups. Now, what I did, and the reason I did this is, first of all, let me give you a little background on the Woodward and Brown smart groups, which I put together many years ago. Ian and I put these together, but on these stocks and groups moving to the upside and downside, these have worked well for years to show us market rotation. But back when I put these together and I built the filters and the combos, I had certain tools in HGSI, but now I've got better tools because I can look at both the well, there's different fields, I should say. Of course, I have VPA. We didn't have VPA back then. I didn't have the ability to look at percent range and things like that, so it made a big difference. But anyway, on Friday, I was looking at a Market Watch report, and it said, some of the stocks that were really down for the day, and I didn't think these stocks and groups were reflecting those well enough. In fact, let's go in and see if I can prove a point here. Okay, I want to use the downside, and I'm going to just click on this, and we'll sort on the, let's see, I need to get to a different view here, sorry. Stocks and groups moving up and down. Okay, and we're getting some of the stocks that move down sharply, but not enough of them. Here's BABA. You can see that BABA moved down sharply, as did CPNG. I'm not familiar with this stock. They both moved down, but there were just two of them in the e-commerce discretionary, metal and minings. There were several. Application software, there were several, but these are from the tools that I had 15, 20 years ago. It's done an admirable job of keeping us on the right side, but I just wanted to experiment with something over the weekend. So what I did is I created some user smart groups with different criteria. Now, this is 11A. These are the standard stocks and groups moving up and down. Now, these are the stocks and groups moving up and down with the user smart group. So let's go to that same one. And I need to go to all securities. And let's try this again. You can see there are 100 stocks here. I limited it to 100 stocks, but you can also see that on the e-commerce discretionary, rather than 2 stocks, it picked up 5 stocks. So just by using the combination of the filter and primarily the combo ranking. The combo ranking is driving these just like it did on the original smart groups. But so I'm getting a better feel for these groups. 1, 2, 3. I'm going to just go through these. It picked 5 of these up rather than just 3, and they may not be the same stocks, and they're not, but I think I'm getting a truer picture of what really happened. Now here's metal and mining. In the top 100 there were just 4, and you can see that these all moved down. And then in automobiles there were a couple here, Ferrari and Rivian. Internet-based services. Now I'm going to go back to that other group and see if there were any internet-based services that were down. So let's do that. So I'll just go up here. Were there any? Yeah, there were, but there were 2. So you can see by changing these, and you have the option, I'm not going to eliminate the original ones, I'll still use them, but it just gives us a better picture, I believe, of what really happened on that on a date. I want to go back to this one, and so let's compare these with the spectrum analyzer. So I'm in stocks and groups moving down SmartGroups, and I'll bring the spectrum analyzer up, and you can see precious metal and mining had 9 integrated utilities, utility networks, and so on. These were the dominant groups with the standard stocks and groups moving down. Now when I go down to the new one, this is under 11A, and click on this. Let's bring that back up, and you can see we get a different picture here. Internet-based services, 10 of these, application software 10, specialty pharma, e-commerce. So these 100 stocks or represent what really happened closer than the other ones. They're all moving down, but this shows the groups that were more dominant, and it's closer to it because it's all based upon the combo, and that combo consists of percentage price change, percentage range, and volume, both to the upside and the downside. And I'm going to go here, stocks and groups moving up, Smart Group, industrial, distribution, and rental. This is the original stocks and groups moving up, and let's go down to the user Smart Group and bring this up. And you can see that banks were clearly the dominant group on Friday. I'll just leave. I'm going to go back up to the original one. Darn it. Let's see. I'm going to pin this up here. You can pin this so it stays up here. Now this is easier. So this is the original stocks and groups moving up, and this is the new one. And you can see that there's a huge difference. Anyway, you can use whatever you want to use. I'm experimenting with this, and I'm going to see how it works out going forward. But these are in your files in number 11 and 11A. This is stocks and groups up and down, the original, and then this is user smart groups. Now when I go in to the user smart groups, okay, I need to close this up here. When you go to your add-on list, this is what you're going to find, and the new groups, they're the end of day groups. These for intraday were already in here, but here's the $15 and up. Here's 1 to 15, down $15 and up, and 1 to 15 on the downside. So they're in here, and also I changed the stocks and groups up end of day to 15 and up. So I just moved these up in here. This is 4 and 4A now, 1 to 15. I didn't put the downside in here. These I'm pasting into Thinkorswim to track them during the day. So when you install the add-on, I put it up there today, and you should have these user smart groups in here for end of day, EOD on the end of it. That's it. I don't want this video to get too long, so I just wanted to give you my thoughts on the market. I mean, it's still bullish. It's overextended, though. I mean, that huge gain in the month of January, and there's just a lot of junk stocks being purchased and driven up because everybody feels that they must get in now, and when you chase, you can really get hurt. So just buy stocks with sound bases that are moving up. Easier said than done, but these groups should help you find some of these stocks. Thanks for listening. Have a good rest of your weekend.